Well, demand has not been a problem for a long time. There may be a little bit of a softening here in the short term in terms of new orders, and I think a lot of airlines are questioning, Boeing's ability to deliver. But we did see in the second quarter there was a downtick in the backlog, and you had the Airbus CEO there talking about over 8,000 aircraft in their backlog. Boeing's about 5,400. Most of that demand is coming outside of the US and Europe. It's the Middle East, it's Asia. And there is an opportunity because Airbus can't meet all of the demand that's out there in the long term themselves. So, Boeing is in a good position. But over time, over the last decade or so, they've really lost ground to Airbus. And until they sort out their own situation in terms of manufacturing and deliveries, it's really hard to see Boeing reclaiming any kind of share against their big rival.
The CFO is speaking to the investor community later this week. What are your expectations in terms of the messaging around a liquidity situation?
Well, Boeing was able to raise debt earlier this year. The company's been carrying a lot of inventory, which is absorbing working capital. And until they really start to deliver more planes, cash flow is just weaker. So they addressed that with a big bond deal, and they've got a few years, of runway. But the most important thing is sorting out the supply chain, getting more planes to customers, and more operating cash flow like in the door. And one happens, with the other. We haven't seen this in years for Boeing.
Peter, we've got about 30 seconds to go. Boeing down 36% year to date to $160 per piece. What is your target price?
Well, it's certainly, long term, there is a lot of value here at Boeing. I mean, and the new CEO probably needs to reset expectations. At this point, he has not, come out to address the full investment community then. And until we get a clearer, line of sight on deliveries, that's when a reasonable target can be set for Boeing.
Peter.